What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into the world of harmonic technical analysis, as well as breaking down what you can expect in the upcoming week with some key economic data releases. First up, we have the durable good orders. This gives us insight into the demand for long-lasting goods like appliances and cars, so this data can be a strong indicator of consumer confidence and economic health. Then there's a GDP report this week, better known as a gross domestic product. This measures the total value of goods and services produced, and it's a big deal because it tells us how the economy is performing overall. We're also going to be looking at the PCE data this week. That's the Personal Consumption Expenditures Price Index. It's the Fed's favorite gauge of inflation. It shows us how much prices are rising for goods and services, and we're going to see if there's still a continuing trend, as PCE and CPI have come out showing that there are signs of inflation slowing down. So it's going to be very important to see if we keep that momentum or not. And finally, we're in earnings season, so a lot of companies are set to report earnings this week from different sectors, so it's going to be very important to see what these major companies are going to report, which can move markets and provide insights into the health of various sectors. So stick around as we analyze these data points through the lens of harmonic technical analysis, and don't forget to hit that like button, subscribe to the channel, and click that bell icon to stay up to date with my latest videos. So having said that, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos is ever financial advice, so question everything, do your own research, and come out with your conclusions. Having said that, let's jump right into those charts. So first up here, we're jumping right into the SPY. We have a harmonic bearish crab pattern on the daily here, so you could tell on Tuesday you went as high as 565.16, and ultimately you gapped down into Wednesday, and from Wednesday to Friday we had 3 days of bearish action to the downside. So what can we expect here harmonically off the crab pattern? As you could tell, we lost hop here at 556.90, and you officially lost a 21 EMA since May the 31st is when the last time we tested it. We went down below and ultimately found support, but this is the first time we're closing below 21 EMA. So harmonically, the next level I am looking at, I do have a level of support here around 546.95 that needs to hold. Otherwise, I do think we might be coming down to test XA at 543.61, just slightly above where the 50 EMA is at. In the off chance that there's continuation with volume to the upside, then you can see potentially more downside below 538 to fill where there's a gap there at 537, and then come back to complete the type 1 reaction at target 1 of 524.92. So what are we looking at here after we look at the oscillator? Specifically, what I'm looking at is the HSI. So the HSI is almost in these oversold conditions. It's actually very close to these oversold conditions. So you could be expecting here a bounce with an HSI arrow. If volume comes up, you could print an HSI arrow to the upside, meaning a reversal is incoming. So obviously, we don't know if that's going to be a strong reversal. We just have to wait. There is a possibility that this could potentially be forming just a potential head and shoulders pattern, right? So you have the left shoulder here, and you're forming the head, where you could just come back up again to maybe create that right shoulder, but you would have to come back down to XA, come back up to test the highs there at 550, fail that, and you could create the right shoulder back down to XA, in which case you would see if that neckline at XA breaks with volume to the downside, and if it does, then you could see the type 1 reaction play out all the way to target 1 of 524.92. If we are going to get support here and bulls are able to step up at 547 range here, you want to see the HSI arrow forming to the upside, in which case you want volume to pick up to the upside again and maybe retrace back to test hop there at 556.90. If you're able to test back above 556.90 and find support above that level, then you'd be looking back up to 560, fill that gap there around 561, test the all-time highs there on 565.16, and continue to the upside. If we jump over as well to the weekly, we can see that this is an engulfing candle depending on interpretation of the candle here. You can see we generated an HSI arrow, but the engulfing candle did engulf the body, right? You didn't engulf the top of the wick and the bottom of the wick there. So in my opinion, when you want an engulfing candle, you want to engulf both the body and the wicks to show the strength of that engulfing candle. But for the time being, it's based on interpretation. You could still say that's engulfing candle because it did engulf the body. So off of increase in volume. So if we're looking at this for the potential downside, we do have this crab pattern. This is also a crab pattern on the weekly, where you can see hop was at 581, and for the time being, because it was overbought conditions with the RSI, HSI, and the ample RSI, you could come back down to maybe test a 90 EMA there at 543, and you have XA at 532.50. Below you have 517, and obviously targets to the downside for a type 1 reaction, which could take some time. So right now we could be probably establishing a range between the highs there at 565 to 532. Obviously only time will tell, but It's going to be very important to see what SPY moves on from here, so definitely keep a close eye out on the SPY. Jumping right over to the triple Qs here, so the triple Qs a little bit more bearish than the SPY in my opinion. You do have decrease in volume since Wednesday, but still ultimately very high volume. So the move, in my opinion, is supported to the downside based off the volume here. So what can we expect here harmonically? We don't have a harmonic on the daily, but we do have some on the weekly and as well as the 2 and the 3 day. So really quick, I wanted to just bring your attention here that you are potentially getting a 921 crossover to the downside, in which case you could see lower targets here. Let's bring up my drawings here. There is a gap to fill here, roughly around 467. So that's kind of below the 50 SMA there, where it looks like it's want to come down and test that level. You do have the HSI signaling that this is an oversold conditions, where you could find a bounce here maybe to fill that gap there that it left here back in early June. So that there is that gap to fill there around 468 and change. If we go over to the 3 day here really quick, you can see what pattern we're currently forming here. Then this is the shark pattern where you're still above hop. So on the 3 day, the 21 EMA is calling for 468, and losing that level, you would come back to test hop there around 450. So that would give us a little bit of confidence to test that that gap fill there around 468, and then below that I do have a target at 450.72 where you could come back down on the triple Qs. If we go over to the weekly, as you could tell, last week we did have an inverted hammer candle. You'd call that a shooting star, but ultimately that was off of increase in volume, meaning a reversal was incoming after it tested a fib ratio there at 504, went as high as 504.52. I had that line there drawn at 504.16. 504.16 got rejected, and now you had follow through off of increase in volume when the RSI was oversold or overbought, as well as the HSI. You did not generate the HSI arrow just yet, but this looks like it potentially wants to come back down to maybe retest that 13 EMA there, and where that gap fills at 469. Below that, like I said, you have 450, and you have hop there at 445. So it's going to be very important to see what the triple Qs does here. If it finds support here where that 50 SMA is at, maybe it does have few more days of bearish action to fill that gap. You would want to be looking for an HSI arrow to print to the upside with high volume to signal that wants to continue pushing back up. So those levels to the upside, you definitely want to come back and retrace about a 21 EMA, since you haven't lost it since back in late May there. And the few times that it did come down to test the 50 EMA, it did hover around there and ultimately did lose it, but was able to manage to close above the 50 EMA, where it went to another new highs there. So if this could repeat the same process where you could come back down to lose a 50 EMA for a bit, reclaim those levels, and then you could be looking back up. If you don't come back to test the levels to the downside below the 50 EMA SMA, then you want to hold support above here, reclaim the 21 EMA here at 484, or the 90 EMA at 486 with some high volume, and then potentially fill that gap that it left down there on Thursday, which is right around 493.15. Above that, then you definitely want to come and break above 504 again, get into that psychological 500 plus level, and then see if you could create higher highs. But for the meantime, it looks a little bit bearish here for the triple Qs, but there's a potential for a bounce incoming. So definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones currently has this bearish crab pattern similar to SPY here, where at the pattern completion, you did generate an HSI arrow on top of a shooting star off of increase in volume compared to the previous candle close, which was lower volume here. So that move, in my opinion, was supported to the downside, where you had slightly decreased volume on Friday. Did not come and complete the type 1 reaction just yet, but it's very close. That type 1 reaction, target 1 is at 401.08, so that's the next level I would be looking at for the Dow Jones to test there. If you do come down there, that's kind of close to where the HSI is almost approaching that midline. If you cross below that midline, in my opinion, you could start the complete type 1 reaction all the way to target 2 at 393.19 when it reaches the oversold conditions. Should it bounce here off that target 1 at 401.08, just right where the 13 EMA is at, that would be around where the HSI midline is at, and where you would be looking for a potential bounce or an indication of a candle formation there, maybe a hammer candle, a downturn here to potentially signal reversal back up towards XA there at 413.72. So as I bring up my drawings here, as you can tell, I had a black swan here that was generated back in April 16th, and as you could tell, PT3 was hit. That target was at 412.84. The high was 413.86, and ultimately that's a level where you were not able to close above. So if you do find support here above target 1, the next level I'd be looking at would be to retest the highs there. Those levels again in the 412, 413. We have some confluence to the upside. XA is now at 413.72, and above that I do have a target there. That's a fib ratio at 420.72, and then you have hop off the crab pattern at 422.61. So if we jump over to the weekly here real quick, you could tell that there's also another I believe this is another deep crab pattern here, where the Dow Jones was very strong, right, the past 2 weeks here off of increase in volume, but right now this looks like an inverted hammer candle, signaling reversal potentially to the downside, and the downside here is towards XA at 397.06, and then below that you have BC at 386.93. If you're able to find support above XA, then maybe you'd be looking down the line. This is obviously on the weekly chart, so it could take some time to play out towards 426.55. So giving some confluence there to the potential reversal after the completion of the type 1 reaction back up to reach these hop levels at 422. So definitely keep a close eye on the Dow Jones. Jumping over to IWM here, so the Russell 2000 has had quite the month here, where it finally did a technical breakout where it went as high as 226.64, and it did generate a bearish sea crab off of that gravestone doji, and then you had follow through with an HSI arrow to the downside, and it's now looking like it wants to come back for a type 1 reaction at target 1 at 213.16. So what can we expect here harmonically? I'm looking at the HSI. So the HSI is approaching that midline, and that could technically be around that target 1 around 213.16, maybe even the gap fill there that it left there at 211.23. Should the HSI midline cross to the downside and reach the oversold conditions, you could potentially see IWM continue on its way down all the way to target 2 at 204.82, where there is also a gap fill at 203.59. Now ultimately coming back all the way down here and losing that momentum is a little bit concerning, especially after a huge breakout. But if data is bearish and maybe earnings is also bearish, you can maybe see IWM give up those gains. So for the bullish case scenario, you definitely want to hold support above target 1. Maybe the last point of support here would be that gap fill around 211. Find support, and you'd be looking for the type 2 return back up to hop there. So you have some resistance here at that XA level around 224.57, where you were not able to close above it, right? You had that one day here where you did close above it at 224.86, but you could not hold on to it. So the next level to the upside, if you hold it, would be to reclaim XA, maybe consolidate up there, and then start looking to push up towards hop at 223.24. On the weekly, as you could tell, similar to IWM, this is more of an inverted hammer candle than a gravestone on the Dow. The inverted hammer candle here, you could see this line here. This yellow line is actually taking a ray from the 2009 lows all the way up here. So there's a few touch points, if you bear with me. Let me show you real quick. So this starts all the way from the 2009 lows. As you could tell, if you follow this line, you can see there's support and resistance, even through COVID as well, when you came down here, and you ultimately broke above in 2021. And now we are approaching this level again, where you found some resistance. On the weekly, you do have a white swan here calling for PT3. Obviously, this is past the 30-day bar rule there, but the 30 bar rule, excuse me. But there's still a potential opportunity down the line that if you do break out to this level at above 226, 224, that you could come and look to test the all-time highs, which is at 244.46, giving confluence to that P3 target, but we're not there yet. So we definitely have to keep a close eye on IWM, especially since a lot of the mid-cap stocks will be reporting as well, and we are potentially seeing a shift in rotation, right, from the blue chips, from the tech sector into potentially this mid-cap stock. So we are seeing that some of the blue chips like Microsoft, Apple, Amazon, Google are coming down, while some mid-cap stocks are continuing to hold the market from continuing any further to the downside. So definitely keep a close eye on IWM. Jumping over to XLF here, the financial sector. So as you can see, we are starting to form all across the map here bearish crab patterns on the daily. So XLF is no different than SPY in terms of the harmonics that it's forming, as well as the Dow, or excuse me, I should say the IWM. So what can we expect here on the financial sector? So the financial sector actually started to move up pretty crazily here in the beginning of the month, where it did generate new all-time highs. It went as high as 44.11. I do have a fib ratio for a new all-time high there down the line if it does come and find support here at 44.99. But ultimately what I'm looking at here for XLF is to complete the type 1 reaction at target 1, which is at 42.60. You do have a dragon pattern that formed here, that it is back down to test maybe BC as well, so that would complete the type 1 reaction all the way to target 2 at 41.80 if you do lose that HSI midline to the downside, right? So a lot of the crab patterns that are forming right now are approaching their midline, and whether they're going to find support above it, then maybe you could see the potential type 2 return. So similar to IWM, right, where it's at that midline as well as the Dow being at that midline. If you do find support above that HSI midline, then you would be looking for a potential type 2 return after the completion of the type 1 reaction to test target 1. You would look for a reversal back to type 2 return to hop there at 44.72. If you do cross below that midline, then obviously you'd be looking to complete the type 1 reaction all the way to target 2 at 41.80, where I do have a support line around 41.70, roughly where the 50 EMA SMA is at. And below that, then you have some downside with some dragon patterns or dragon targets here calling for to test the 200 SMA there around 38.72. So if we look over to the weekly, similar to IWM with that inverted hammer candle at the top of the trend, there's also here a shark pattern where you did not test hop there at 44.59. You ultimately lost the 1.13 of the shark pattern there at 42.92, or are not able to close above it. So if this is going to be an indication of a reversal that's incoming, the next level harmonically here for the shark pattern you'd be looking at would be the terminal bar at 40.47. If you're able to hold above 41.70, then you want to reclaim OB there at 42.92, continued either consolidating above that area, so you can start looking for an attempt there to complete type 2 return a hop at 44.59. If you do come back to the terminal bar on the weekly, then that is a concerning level to lose, because if you do come back down, the next level harmonic would be all the way to 35.91, just rightly where the above the 200 SMA. The HSI here on the weekly, though, it did cross the midline, indicating that if it does reach these overbought conditions, you could be seeing that hop or even higher than hop there to create a new all-time high. But right now we're still seeing some bearish action on the daily, so we'll see if that HSI midline holds support right where the target one is. Just maybe you could come back down to test the 21 EMA there on 42.25, where you would want to hold support and see if a reversal is incoming. So definitely keep a close eye out on XLF. Jumping over to XLE here, the energy sector currently has this bear shark pattern. At the completion of the pattern, you got rejected at the terminal bar there at 94.51, and on Friday you did generate an HSI arrow off a slight decrease in volume. So what can we expect here harmonically? To the downside, the next level I'd be looking at would be to complete type 1 reaction at target 1 at 91.06. You do have quite a bit of support above that level, as you have all these EMAs. You do have a potential 2050 crossover to the upside here. Should that cross, maybe you could find support above target 1 and start looking for the type 2 return to hop there at 97.28. So right now the HSI is still a bit overbought. So if it comes down to even just the midline, I do believe that would be below target 1. So you could be looking at maybe anywhere between target 1 all the way to target 2 at 88.39. If you do come back below the HSI midline and reach the oversold conditions, I do believe you would be retesting the 200 SMA, maybe even losing it. So still some room to the downside here. If we go over here to the weekly, we also see that this current downtrend that it was just in, you did find support here, and you did manage to close above or test the 618 there at 94.65, but ultimately we're not able to close above the 618, and you closed just at the 382 above 91.98. So in my opinion, for the energy sector to be bullish again, you still need to bullish in terms that you need to retrace back in this current impulse wave here. So this impulse wave, you came down here, so for this to start looking like it wants to create higher highs and higher lows, you definitely want to close above the 618, right? That would give back the momentum bullish, that would shift the momentum bullish off of increase in volume. So you are getting some volume to the upside here, but ultimately you still have to close above the 618 and 94.65. Otherwise you could just be creating a lower high and then come back down for a lower low. So definitely keep a close eye on XLE. Jumping over to Apple here. So Apple has had some harmonic selling recently, and what looks like it wants to come back to retest the 21 EMA there. So the 21 EMA there is around 222 and change. As you can tell here, there's no current harmonic pattern being formed on the daily. We did have the shark pattern, but that is invalidated as it broke way above hop. But as wanted to bring your attention that you haven't really tested the 21 ever since you broke above it back in early May, and you did get close to it on Thursday, but you still haven't tested it. So in my opinion, that's maybe where you could find support. The HSI is actually in oversold conditions, and you could be looking for an HSI arrow to the upside, signaling that reversal is incoming if you do get volume back up. If you go over to the weekly here, that is an engulfing candle on the weekly, and we could be looking towards a retest of the 90 EMA around 212, and you do have OPR at 207.09. So that gives a little bit of confluence here with my drawings down to if you do lose 221 where the 21 EMA is at, you could come back all the way to 209, all the way to 205 there for Apple. So right now it looks like it's a bit oversold here harmonically on the HSI oscillators, where you could find support. In the event that you don't, then I do see further downside on Apple towards that 206 range, and even all the way down to 198. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft currently does have a bearish ABCD pattern on the daily. You did go to hop there, but ultimately were not able to hold it, and you came to the ABCD target. You fell below the 21 EMA. You had a 921 crossover to the downside, and that is an EMA strategy there. Ultimately, it is when a crossover happens to the downside, it is bearish and means continuation to the downside. Potential continuation to the downside. So what can we expect here harmonically? The HSI is a bit oversold. The RSI still got plenty of room to the downside, and if we do get some volume to the downside here, I do think you will be completing the type 1 reaction potentially at target 1 at 419.80. So if you do manage to hold support here, because you did close below the 50 SMA here in EMA, the last time it got down there was back in early June. It did close below it, generated an HSI arrow back above the 50 EMA and SMA, and you continue to make higher highs. So if that's going to be repeat the same process, then you have to reclaim the 50 EMA, close with an HSI arrow. The HSI arrow should generate back up there if it does get some volume to the upside. So one scenario that could play out here as I bring out my drawings is there could be a chance here where you do come back up to potentially fill up that gap to the upside. As I bring out tool here, just wanted to quickly share what I could see happening here. So you could find support here, come back up to maybe even the gap fill, maybe retest the 21 EMA on all the way up to 452, and if you get volume to the downside, you get rejected, there's a possibility you could form a potential inverse cup and handle, in which case you would start looking to create lower lows and lower highs, right? This is obviously would be off of bearish data and maybe even bearish earnings for Microsoft. That could be a scenario that could be potentially playing out. That cup and handle would look something like this here down the line, right? You come back up here to test these levels, fill the gap, and then make a lower low to complete the whole type 1 reaction all the way to target 2 at 399.45, which would test the 200 SMA and EMA. So there are some actually blue chips that already are coming down to have lost already the 50 EMA SMA and are approaching very close to the 200 SMA. So it's going to be very important to see what Microsoft does on from here. So in the event that it does find support like it did back here on the 50 EMA, above the 50 EMA SMA, then you want to generate just an arrow with volume to continue to the upside. You close that gap flow at 446, reclaim ABCD there at 452, and then have another shot and close above hop at 460, where you would be looking to retest the all-time highs again. Off the weekly, you did come down to test the 13 EMA and ultimately closed above it. So right now you are holding above 433.87, and the weekly has been good strong support above the 21 EMA. So ever since we broke above it in March 2023, we have not lost the 21 EMA. We did close below, but we ultimately found support above it really quick. So if Microsoft loses this level of 433, then the next level I'd be looking at off the weekly would be the 21 EMA at 427.17. So definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon, very good selling here. So the move to the downside was supported here because it was just continued bearish pressure here, and you did get similar to what Microsoft did. You lost the 50 EMA there off of increase in volume, 50 EMA SMA off increase in volume. You get the 921 crossover. You did get some bullish volume come in on Friday, but still below the 50. And as you could tell, for Amazon, it has found support above the 50. Once it loses it, it does come and close below it. Ultimately, it gets some volume to the upside, and then it starts to trade above to create higher highs. But right now, you are closing what it looks like to be the third day below the 50 EMA SMA. So you definitely want continuation to break above around 187 and start looking to retrace some of this back up. So from the previous all-time highs here, you're currently for this to shift momentum, you definitely want to break above 193.19 from this recent swing high to swing low. If this is actually the swing low and we do find support here with the fib ratios, you definitely want to be anywhere between 190 to 193 to signal that a potential shift in momentum has shifted bullish again. Otherwise, you could be coming back to make lower lows, and you could come and fill this gap here. It left, it still hasn't filled it here, so that gap gets filled at 173.92, and ultimately you could come back to test the 200 EMA at 168. The entrance of the gap there where the 200 SMA is at 166, where there is that gap to fill all the way down to 160. So right now, harmonically on the oscillator, you are completely oversold, similar to Microsoft. So you could generate a potential HSI arrow here, meaning a reversal back up is incoming. And again, same scenario here would be with Amazon. You would come back up towards that 921 EMA. You did leave a gap as well, similar to a lot of the blue chips did leave gap downs here from Tuesday into Wednesday. And like I said, this could be also a setup based on bad data, maybe towards its earnings. Amazon has bad earnings. You could slightly come back up to retest some levels. You could create that inverse cup and handle, fail that, and then come make a lower low. If we go over to the weekly, you have this bearish shark pattern here where it was calling up here to test 203.04 at hop. Ultimately, you got very close but failed the terminal bar there at 189.77, and currently holding support above the 21 EMA. So that's a good level of support. You haven't lost it ever since you broke above it. Back over here since March, April. You did come to test a 50 EMA here during October. That's obviously when the October lows were. So if you do lose the 21 EMA, the next level I'd be looking off of the weekly pattern would be the 886 OB of the shark pattern at 175.95. You have that little small gap to fill. Then you could see maybe that retest at 166 and change, where the gap fills at roughly so slightly above the 50 EMA. Right now on the weekly, the HSI is currently below that HSI midline, so it's going to be very important to see what Amazon does from here. Does it hold support above the 21 EMA? And it looks like it starts to come back up for a higher high, right? As this is in an upwards channel, they're creating higher highs and higher lows here. So we could be in this channel. All we did this week was just come back down to create that higher low, and ultimately if you find support above and reclaim the HSI midline, you'd be looking for a higher high down the line. That's if data is bullish and also earnings is bullish for Amazon as well. So definitely keep a close eye on Amazon. Jumping over to Tesla here. So Tesla on the daily has this bearish steep crab that formed here after the technical breakout where it went as high as 271. Ultimately, you cannot get to that hop level of 275.74. You failed XA at 246.88 and are currently at BC there at 235.90. So volume has started to decrease here for Tesla. The next level I'd be looking at would be see if it loses that BC target and comes down to complete the type 1 reaction of target 1 at 220.50. And if it does, then you would want a reversal candle here to potentially signal that a type 2 return is coming back up to test hop there at 275.24. The HSI is a bit oversold here, so you could start generating a potential reversal signal here, and that could be at that BC target at 235, maybe even the 21 EMA there at 230, and all the way down to even a possibility at target 1. So if you do fail target 1, then I'd be looking at to see if it fills the gap here that it left, and that gap is around 213.23. And if you lose that gap and you come back all the way down to target 2 here at 189.30 to test potential breakout levels again. So that could be a case. You have earnings coming up soon on the 23rd of July. We'll see how they report earnings there as well. You do have a potential golden cross happening on Tesla here. The SMAs, the 50 SMAs, the yellow line, and the red SMA is a 200 SMA. So there is an opportunity where those cross, and you could potentially see Tesla breaking out to the upside again and then filling gaps, because there is a gap up there on 289, and then you have the psychological level at 300 for Tesla. If we go over to the weekly, I know there's a lot of drawings here, but we are still in this Garley pattern where T2 is a level of resistance here where you are not able to close above that of the weekly target. So you could be coming down here to retest the breakout of that 200 SMA, and that's currently around 231, and maybe even target one there at 225, as the HSI is kind of a bit overbought right now. So you could either consolidate here between XA and BC, find support, and then look to push back upwards if there is bullish data, bullish earnings. Otherwise, if there's bad data and bearish earnings, you can maybe see a potential type 1 reaction taking place. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google did get some momentum to the downside off of increase in volume, and on Friday it did manage to hold above the 50 EMA there off of decrease in volume. So the HSI is kind of oversold right now. No current harmonic pattern being formed on the daily here. So in my opinion, you kind of look a little bit bearish here, as you kind of lost this wave here from the downturn here back in May to the swing high there, swing low to swing high. You are below the 618 there, so slightly below it, still haven't lost it completely. So this is, in my opinion, a key level here for Google to hold support. If it doesn't hold support, then there's a big move to the downside potentially incoming, all the way down to where Hop is harmonically at 163.29, where there is a gap to fill, right? The gap gets filled all the way to 156, where the 200 EMA is at. If we go over to the weekly, you do have same volume you had past 2 weeks here, and no volume to the upside indicating a reversal just yet. You do have this ABCD pattern where ABCD has been resistance. So the next level here on the weekly would be the retest of 175, maybe the 21 EMA at 168. As you could tell, it has lost a 21 EMA on the weekly and has found support above the 50, so there is a potential opportunity there that it could come down all the way to between 152 and 150, giving confluence there to the big drop that potentially could happen on Google if you lose that 50 EMA on the daily. Obviously on the weekly would take some time to play out, but you do have this ABCD pattern calling for a type 1 reaction all the way to 137.77. The HSI did cross that midline to the downside, so it's going to be very important to see if it actually reverses and finds support and reclaims that level to start looking for reaching the overbought conditions again, which would push Google back up. Otherwise, you do have potential more downside, and obviously Google does report earnings this week, so this is going to be very important to see what this company is going to report in terms of earnings. If there is bullish case scenario, you're looking for a potential move back up from the swing high to swing low. That's roughly to reclaim the 618 at 185, which would shift momentum back up, being bullish to create higher highs and higher lows. And then you could be looking at 193.70 and ultimately a psychological test at the $200 range. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta currently has this bearish bat pattern on the daily. For Meta, you actually came down fairly quick here, almost to test target 2 there at 455.90. You went as low as 459.12. You did generate this hammer candle here, and then the next day you had almost a potential follow through where you did generate an inverted hammer candle. In my opinion, that's off decreasing volume, and it looks weak for a reversal because you did not manage to close where it went as high as 486.71 and ultimately just closed slightly above the previous close off of decrease in volume. So what can we expect here harmonically if you're not able to find support above target 1 at 481.48? The next level I would be looking at to complete the whole reaction here, target 2, would be to test 455.90. Below that, then you could come back down to the 200 EMA SMA, which is around 431, all the way down to 425. And below that, you do have a gap fill all the way down to 401 and change. Meta does report earnings on Wednesday the 31st, so you could start to consolidate maybe up here, maybe above target 1, anywhere back up to that $500 range, because it does have been trying to reclaim the 200 EMA, but ultimately always finds resistance and you come back down. So if to the upside, the next level you want for Meta to reclaim from the recent swing high to swing low is to come back to test that $500 range. Like I said, that 50% retracement would be at 501. Ultimately, you can get bullish again if you reclaim 511.17. and then you can start seeing potential reversal back up for a type 2 return to hop at 547.99. We'll be looking at 518 XA and then hop at 547.99, and I do have a fib ratio all the way up to 567.41. So if we go over to the weekly here, we do have support above the 21 EMA. Ever since you broke above it, you've been holding pretty well there. So far, for the time being, Meta is finding support above the 21 EMA. In the off chance it doesn't, then we're looking at the 50 EMA around 419 all the way down to 406 where that gap is, and the 50 EMA and SMA are at. So definitely keep a close eye on Meta. Jumping over to Netflix here. So Netflix on the daily currently has this alt bat pattern on the daily. You obviously had huge amount of volume come in because of the anticipation towards earnings, and ultimately it did come back down, test BC there at 635.38, ultimately closing below that on Friday at 633.34. One thing I do want to mention is the earnings. They did do a double beat. Year-over-year growth and year-over-year revenue was a beat, but where it did come and a miss was at the quarter-over-quarter. So quarter-over-quarter, they reported last quarter 528 EPS, and this quarter they reported 488. So in order for Netflix to continue pushing, in my opinion, to get even more bullish, you needed to have a better quarter-over-quarter in terms of EPS, and they did not. They had a lower EPS for quarter-over-quarter. So in my opinion, is that an overreaction? Who knows? We're going to see if Netflix finds support here. Otherwise, you could be coming down for a double bottom on the HSI to complete the type 1 reaction at 609.29. If you lose that level, then you go to 583. Then you have the 200 EMA at 567, the 200 SMA at 552, and a huge gap to fill all the way up to around that $500 mark. If we go over to the weekly we can see that the 21 EMA does hold support since you broke above it here in October. The last time we tested it was in April. You found support, so that level is around 622. Should you lose that, then you start looking bearish towards that $500 range again. But right now, the next level is to the upside here. If you do find support here on BC, you did generate that HSI arrow. Want to claim BC at 635.38, reclaim 651, then go to hop at 665.19, then retest the all-time high levels at $700.99. So definitely keep a close eye on Netflix. All right, jumping over to NVDA here. So NVDA, no current harmonic pattern being formed on the daily yet. You did get a 921 crossover to the downside. Volume has started to decrease here for NVIDIA. So what can we expect here? You are a bit flatlining on the HSI. You could still lose that 50 EMA, and you can start looking at retesting some of these gaps here, right? There is a gap all the way down here to 106 and change, and a huge gap all the way down to 96. So you would obviously lose that $100 psychological level. I do have resistance or support level at 97.04. So right now, key spot for NVIDIA, right? So it did try to break above earlier and 2 weeks ago, a week and a half ago, towards above 132, went as high as 136, and ultimately is not able to hold support. Right now, what we're looking at here is a potential M formation. This is an M formation here, which could be a bullish harmonic pattern forming. You would still need to create a lower leg down there for point D to signal that a reversal or a harmonic pattern is forming at the completion of the pattern. So I haven't drawn out that yet, but I don't think there's one generating so far. So what are we looking at here just in terms of fib ratios and EMAs? So the 50 EMA has found support here, right? So last time it tested, it was April, found support. You did close below it for a few days, ultimately reclaimed those levels and started to push for a higher high. So we're going to see if either NVIDIA does the same thing again. Their earnings isn't until August the 28th, so they still got about a month. See what happens there, because right now the semiconductors are a bit pushing to the downside here, with the exception of a few that are holding pretty well, like Intel. But NVIDIA right now, in terms of the semiconductors with AMD and TSM, are coming down here. So it's going to be very important to see what maybe, I know TSM reported earnings and they did report some good numbers there. So we'll see if AMD soon also reports decent numbers as well. As I do believe their earnings is coming up too as well. Really quick here, their AMD's earnings is on July the 30th, so maybe there is a potential sympathy play there for NVIDIA. in terms of if AMD reports good earnings, you could see a potential move to the upside again. So to the upside, you want to reclaim 120.88. So 120.88 here for me, around that $120 range, is a key level that it loses the support level there, but it also tries to reclaim it. So that is a very key important level to watch out for. As you could tell here, you had a lot of price action going here, so you could be establishing a volume range profile there. So if you're able to reclaim back up to 120, you want to fill that gap there at 124, and then ultimately reclaim to 132.66, test the all-time highs at 140, and then make a new all-time high at 144.71. So definitely keep a close eye on NVIDIA, as it is in a key spot here, where if you do fail some of these levels, you could potentially see some downside on NVIDIA. But if it finds support, this is a sleeping giant again that can wake up at any given moment. So definitely keep a close eye on NVIDIA. All right, jumping over to Bitcoin here, guys. So Bitcoin on the daily, I did mention a few weeks ago to the Discord that the dragon pattern was one of the key levels I was looking at for a retest, which was CD there at 57K. So we did test that. We actually fell below it. I did mention that if Bitcoin hits CD off the dragon pattern on the daily, that this is where you could come and test also the 200 EMA and SMA. And if it didn't hold that level, then you could be losing some major levels for Bitcoin. So fortunately for those that are long, you did not lose 57K. You held support right now. I mentioned that if you were able to reclaim around 65, 66K here, that the momentum could be shifting bullish back again. So if we take the most recent swing high to swing low, even from this area here, from the where the dragon point was created, so I believe that's 73.7, and this high here was 71. Yeah, so even if you come up to this level from the recent swing high to swing low, we are currently retracing above the 618. So that momentum has shifted from the recent all-time highs to the recent swing lows here. We have reclaimed the 618 here, so the momentum, in my opinion, has shifted bullish. You still need confirmation. You know, you had this close. This is the first close above it, right? We could argue here by pennies here. You did close above it here. This was a retest, held support, and now looking to push back to create maybe higher highs and higher lows. You could also argue the case that this was an inverse head and shoulders here. This is the left shoulder, head, right shoulder, and that T1 would be that neckline, and you could be looking to play out to retest 69K. 69K has been a level of resistance. You did break above it, but you ultimately always fell it and come make lower lows. But right now you are approaching 69K, so that's the next level I'd be looking at to retest 69K, break above that, go to XA, because XA has also been resistance here at 70K. You're able to close above that, then you go see hop there at 75K, and then OPR at 77K. So right now Bitcoin, in my opinion, on the daily is in a bit of a tricky spot here, as the RSI and HSI, AMP RSI, all are completely overbought, which means you could maybe test 6970K, and a reversal, an HSI arrow would print to the downside. That could indicate that a reversal isn't coming, maybe to even retest all the way down to 63K, right? So you had that break above target 2 here in July the 15th that you could come back and retest. If it is a healthy retest, you could do something similar to this. Find support above the 21 or the 2050 EMA there, and then create higher highs, right? You would give that opportunity as well for the 2050 crossover to play out, as it is playing out to the upside here. That is a 2050 crossover, so that is a bullish crossover strategy that you could use. But ultimately what you want to see is maybe come back to retest the breakout, find support, and then continue going. The volume on this push up was supported of increasing volume, and the recent downwards action that it has gotten has been on decreasing volume. So if you are going to come and test maybe that breakout here around 63, 64K, you want to see it off low volume. If it's low volume, that means that there is some exhaustion there, and you want the bulls to step back up again and to create a higher high down the line. If we go over to the weekly, like I said, you are reclaiming above the 618, and you're just having resistance. You could tell here, this level here around 6970K has been a level for Bitcoin that's having a hard time to break above. So right now you are approaching that HSI midline. See what it does there, and that's roughly could be at 69K. So definitely keep a close eye out on Bitcoin. Alright guys, that's it for me. That's all I have for you for this video. I will be streaming tomorrow, same time as always. I stream from Monday to Friday from market open to market close, so if you're interested in that, I do stream over on Twitch, so link to my Twitch in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow bright and early. Take care, everybody, and peace.